Hey everyone, Couch Investor here with another video for you today. Now in my last video I talked about the oil companies, the whole situation regarding oil. If you haven't watched that, go check it out right here. The video before that was about hospitality, Hilton and Park Hotel and Resorts to be more specific. It was the first video of this series. In today's video we're going to talk about Hyatt, and in my last one we will be talking about Marriott stock. Now, before I start, if you haven't subscribed to the channel, please do subscribe if you like the content. We're trying to reach 200 subscribers by the end of next month. The goal for this month was to reach 100 subscribers. We are now at 123. So yeah, it's great to see you enjoying the content. If you like, please leave a thumbs up. And if you disagree with some of my points, or if you have your own personal opinion, don't hesitate to comment that below. I see a lot of content creators here on YouTube that have not very valid points out there, and nobody really comments on that. So if you see some information where you have more info about it, really I'm very open to that. Just leave it down in the comments below. And again, timestamps and articles will be in the description or in the comments below. So without further ado, let's get started. Like I said, in this video we're going to talk about Hyatt Hotels, ticker symbol H. Today the price is $52.63, down only 1%, 24. Year to date, well, the stock took a hit like most hotel stocks. Its price almost became half of what it was before. Which could make this stock a good buying stock right now to add it for a portfolio. As most stock, you can see here almost a double bottom, so that could be nice. Obviously the stock has rallied since its bottom. Whether that was too fast or not, I think it was a normal situation that was bound to happen, a rebound. That quick, maybe not, but maybe bad news was happening so fast that people reacted very, very quickly. For me, Hyatt Hotels is like Hilton, a very stable company. In the long term, when hospitality and tourism will come back, I'm sure they will fare okay, in my opinion. Now let's go and look at the balance sheets real quick. Like I said, ticker symbol H, price is $52.63. Very low PE ratio, but that's expected right now, of 7.3. Yearly dividend of 80 cents only. 5-year average PE of 27.84, so very cheap right now. They beat their earnings. I think they beat their earnings for the last 3 or 4 quarters, so that's very nice to see. All-time high of $92. Now, cash only 961 million, but it's very low compared to the others because, well, first of all, the company is smaller than others. You will see this during the whole balance sheets overview. The numbers are quite small. Revenue of 5 billion, cost of revenue of 4 billion. It's approximately, I rounded up, with a gross profit of $900 million, total operating expenses of $746 million, operating income of just $187 million. Again, cash, same thing. Receivables of $421, inventory $12 million, prepaid expenses $134 million, which is a total cash and assets of $1.7 billion. Now, non-cash and assets, property, you would expect them to have a high number of that, $6 billion with a depreciation of $2.1 billion, which leaves us at a net of $3.9 billion. Intangible assets of $437 million, and then other of $527 million, which leaves us at a total of $6.7 billion in assets. If you count both of them together, that's $8.4 billion approximately in assets. Now, liabilities, Short term only 1 billion, long term 3.3 billion, which leaves us at 4.45 billion dollars, which means that they have almost double the assets than liability. That's a very, very good ratio to have. That's why I said before, I think it's a very solid stock to buy. Now, only small negative point is that their margins are quite low, so gross margin of 18.7% and an operating margin of 3.9%. Now this is very low, especially during these times. If you have a company that has operating margin of over 20%, they might cut those operating margin so they could survive longer. In this case, it would be very hard to cut some operating margins. Now liability breakdown for the short term, 11 million of in debt, accounts payable 150 million, accrued liability of 304 million, deferred revenue 45 million dollars, none, and a total of $1 billion, like we said here. Again, if you don't know what this is revenue that they still have to collect. So maybe reservations for the future that they still didn't collect. Now stock repurchasing, they did 421 million in stock repurchasing, which is a lot, because as you can see, their cash pile is only 961. So there is that. Last year's earnings per share were $7.21. This year's expected is a minus $1.2. They only have 35 million shares outstanding, which is not a lot at all. Like we said, dividend payments of 80 cents per year. A earnings from last year, current valuation, 5.3 billion. Earnings from last year, 766 million. Valuation versus previous earnings, which gives you a total rate of return, a return on investment of almost 7 years. That's why it's always as close as possible to the PE ratio. Now, current reflection of earnings is only $190 million. So if you think this company will go back to normal in 1 year or two and will report earnings of 766 million, well, you can see here a big difference between those two, almost 4 times. So it could mean that it would be a good opportunity to buy right now. Now, stockholders' equity, very good. It keeps on growing. This is what you want to see. You want to see the portion of stockholders' equity always go higher or higher, and if it goes lower, you want a good reason for that to happen. So overall, good balance sheet in my opinion. Very, very happy with that. Now let's go over a couple of articles, and that would be, and then go to the conclusion. Now this was at the beginning of the month. Just an article saying why those hotels and Disney stocks popped. Well, I'm not going to go over the whole article, but the article links will be down in the comments below. Now, most of those stocks are getting hit hard because of bad news. Now, so when you hear bad news, those stocks, hotel stocks, airlines, Disney, entertainment, whatever, will get hit hard during that day or that period. If there is good news, obviously the stock will rise during that day or that period. But even if the news isn't that good, you only need news to be less bad than what they reported before. That's why my opinion at the beginning of this whole pandemic situation, there was only bad news one day after the other. So the market crashed at, I don't know, 20% in a week or so. So now when we hear bad news, but it isn't as bad as expected, it has the opposite effect of being as good news. So that's why those stocks popped early on, probably right here or so, or here, somewhere there, because people had so much bad news on TV. They hear bad news everywhere. So if, let's say, they expected to have, I don't know, 100,000 cases, and suddenly, oh no, the expected cases are only 60,000, it's still bad news, but better news than expected. Now the next one will be, well, obviously, revenue per availability per room to decline sharply in Q1 because of the coronavirus. Now, obviously, since hotels are closed, rooms won't be filled, occupancy will be low. We can see that here again, the same graph. Remove this. How every region in the world, the monthly hotel occupancy rates went lower and lower, especially in Asia, of those two. This is February 2020. This was February 19. You can see this was 66.6%. Today, well, 2 months ago, let's say, they were at 41%. So it's a 25% decline. Obviously, in the States, I don't know what happened here, but went up, then it went down, then it went a bit up again, but still lower. This was in February. Since then, it has been going lower and lower. Same thing has happened in Europe. Everything has gone below. It's at record lows. There are lots of other stats we can pull up. I might find a couple of interesting sites and put it down below. But if we go over every stat, then we'll be here for a long time. Now, let's go back to this article. In the past 3 months, we go right here. In the past 3 months, the company's share has fallen 35% compared with the industry decline of 38.5%. The company expects first quarter 2020 revenue in the range of nearly 980 million to 1 billion, down from 1.2 in the prior quarter. Now, as you can see here, this is the decline that we were talking about. This is the industry, this is the hotel, so it fares a bit better than the whole industry combined. As of April 15, nearly 35% of hotels globally have been shut down. Moreover, for the first quarter, the company expects cash and cash equivalent to be nearly $1.2 billion. Before I end this article, this is also very interesting. Let's say in April, on a month-to-date basis, through April 15th, occupancy was 20% in Greater China, up from low of mid-single digits in mid-February. That is because, well, in China, they said that they have everything under control. They are starting to reopen businesses and hotels and their overall economy. Whether that's a good idea, I don't think it's a good idea, because I don't think they have it under control. We can see the numbers are suddenly, oh, they've made a mistake, and suddenly the numbers are twice as high. So obviously it will take time, and even I think it's in this article, they yes, this is now why they are sinking. This basically says that even when the whole situation gets sorted out, what are the chances that the first thing people will do is start going on vacations, start going on into hotels, to fancy hotels like Hilton, Hyatt, and Marriott? What are the chances of that happening? Probably a bit lower than expected. Also, for as long as this situation carries on, they will lose more and more money, and that's one or two parts. But the last one is the businesses. A company might think twice to send a manager or an employee to an event, to one of those hotels, because, well, they also have a crisis. They might also want to save up some costs, so they might cancel events. They might cancel, I don't know, having fancy hotels and whatever. So it might take time for all those hotels and well, the whole industry to go back to normal, because it's not only them, the hotels, that have to recover from this. It's the people that go to hotels that have to recover from the impact this whole situation have had on all of us, basically. So I think if by the summer we could start reopening economies worldwide, I think by the holiday season, things might start to move forward. But I would expect the summer of 2021 to be a back to normal, so to say, for tourism. Yes, it's 1 year from now, but people need to understand the impact that the world has gone through right now, because I don't think it's ever happened where the whole world has been in a complete standstill, where nothing has been working, as airlines well, airports are almost shut down in a couple of countries. People don't fly, so why would you need planes? They only need planes for cargo. Um, Businesses are closed. Everybody's at home. Lockdowns, most parts of the world, um, except for Florida, of course. And yeah, that's mostly my view on what could happen and what will happen probably for before those companies will go back to normal. So yeah, that will be all for today. Oh, it started raining. But overall, I think it's a very good company. Obviously, if you have the time, for me, my investments is I have to hold a stock for at least 5 to 7 years minimum. Then, obviously, during those 5 years, I will always look at the situation of the stock. If suddenly there's very bad news, obviously I might consider selling it, but if there's very good news, I might increase my position, etc., and look at my portfolio. If I can sell some stocks here, some stocks there, then buy and cost average and all. But again, if me as an investor, I look at this stock, I said, you know what? If I hold it for 7 years, I might double my money or maybe triple my money, because I know it's probably going to go back to normal in 1 year or two. So that will leave me another 3 years for this stock to grow even more, and for me to earn even more money. So that will leave that on a positive note for this video. Again, I want to thank everyone that has been watching. If you haven't subscribed to the channel, please do so we can reach our goal of 200 subscribers. And see you only in the next video. Bye bye. Enjoy your weekends.